I don't know where you guys find these stock ideas, but keep sending them. Join the Discord and keep sending good suggestions like this. Today we're gonna take a look at another microcap, in this case Dedicare. Hey, I'm Andreas, I've been investing for over 10 years, and in today's video let's take a look at the operational side of Dedicare. I will speak briefly regarding this. I have some stories about how the operations work and how they're poised to ride a macro trend, and then we will talk some numbers to understand why the chart looks like it does. Because if you look at the chart here from 2013 to today, you don't see a lot of action, you see a lot of volatility, but price could have increased by a lot more. Why is this? First of all, let's take a look at the operational side of this business. So this is a staffing company. They're staffing doctors, nurses. They're doing this in Sweden and in Norway. And in both countries, they're poised for growth. This is very easy for me to understand because I have many friends who work in this industry. Some are doctors. I have family who work as nurses, and I'm poised to understand how this trend is going. In Sweden, for example, which is one of the countries where they are doing staffing, there's a big debate about something called stafettläkare, which basically means doctors working in different clinics, moving around, doing this via a staffing company like this one, Dedicare, and then they're increasing the pay by a lot. They're able to do this because of the shortage of doctors that exist in the healthcare sector. And then on the flip side, for nurses as well in Sweden, we see that they might go years and don't really get good raises, and they look around and they see, hey, I can go to this staffing company and I can come back to the very same hospital that I used to work, but I get a 30-40% pay increase, and they decide to do that, of course. And Dedicare here, they have a 3% margin, so it's not a huge margin, but profitability increases and they're riding this trend. So if we look at cash flow from operation, we can see that it's indeed increasing. And then they're operational in Norway as well, and Norway is truly a gold mine. They have a shortage of almost everything, not only nurses but also the position below nurse, the assistant nurse, or undersköterska as we say in Swedish. And they're having to staff this from Sweden. They pay basically a monthly wage for the nurses to come and work just a few days over there. And they're doing this via staffing companies as well. So this shortage is being filled. This middleman is extremely profitable in this case, as we can see from the dividend of this company. So that's the operational side. It's a clear fit. It's very easy for me to understand that, alright, this business is going to be growing. We're going to have more old people, more need for healthcare, and this is just positioned to do slightly above market returns, in my opinion. We can see the market cap here. We're not going to see huge changes here in stock price, by the way, but market price here, 461 million Swedish krona. So this is a tiny company. You divide by a bit more than 10 to get in euros or dollars. It's about 12 for the euro, about the same for the dollar. So 46 million market cap if we just divide by 10. Absolutely tiny micro cap company. In the board, in the management team, they have both people from Norway and from Sweden. So they're poised for gains. A slight warning here, there's some regulatory risk. If governments were to go in and regulate this, it could hurt profit margin, it could hurt the way that the industry operates, although I don't see this on the agenda anytime soon, because if they decide to regulate away this, they're gonna have a shortage of staff basically, but there's a slight risk regarding this for the future. Alright, one very interesting thing here that we see that explains why stock price is not moving a lot higher quicker is because of the dividend here in this case. If we take a look at the dividend, we can see that it's about 10.64% here, with trailing annual dividend rate of 6.5 here for the year. So you see 6.5, and we see that stock price is below 65. It was 61 here as I'm recording this video. So a quite high dividend yield. This is above market returns for Sweden. This is not America. We don't perform as well as your S&P 500. But just the dividend yield alone is outperforming in this case. Payout ratio is quite high at 94%. But that only makes sense because what are you gonna reinvest your earnings into to grow the company? You don't buy machinery, you don't buy equipment, you're a staffing company. You don't need to have a lot of assets on the balance sheet or take a lot of loans. And this also goes to show, if we look at market cap versus enterprise value, this is something that immediately stood out to me, and one of the reasons that I didn't even have to look at the balance sheet, because market cap is actually larger than enterprise value. And enterprise value is basically market cap, and then you add the debt, and then you subtract the cash on hand. So in this case, they have just, a lot of cash on hand and not a lot of debt. And that's why we're seeing that market cap is larger than enterprise value, because of this excess cash on hand. So a very, very strong balance sheet. It's basically just a cash cow paying out dividends. It's easy to see that there's some strength behind a company like this. So it's an absolute excellent suggestion. Once again, thank you to the Discord server here for commenting good stocks like this. In my opinion, this stock is not gonna make you rich. It's not gonna make you poor. But what it's gonna do is it's gonna pay out a nice dividend yield, riding this trend of staffing shortage in the healthcare industry. So once again, an excellent suggestion for the community. That's been it for commenting on the operational side, the financial side of this stock. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.